Looking for the best dividend stocks to grow your passive income in 2025? We've got you covered with top picks offering strong yields and stability. As Warren Buffett wisely said, if you don't find a way to make money while you sleep, you will work until you die. Dividend investing is a proven strategy for financial freedom. In this video, we will be discussing the 5 best dividend stocks for 2025. So, let's start. The first stock we have on our list is Opera Limited, ticker symbol OPRA. Opera operates web browsers tailored for various devices and has expanded into AI, fintech, cryptocurrency, and e-commerce. Here's why it stands out. High-yield dividend. Offering a 4 to 6% dividend yield, Opera provides a solid income stream. AI-powered growth. A partnership with Alphabet integrates AI models into its browsers, boosting engagement and revenue. Undervalued stock trading at 2 times sales and 11 times EBITDA, it has strong profitability and upside potential. Despite strong fundamentals, Opera holds just 3% of the browser market, competing with giants like Google Chrome and Safari. If it fails to expand, dividend growth may be impacted. Next stock we would talk about is Altria Group, ticker symbol MO. Altria Group is a powerhouse in the tobacco and consumer goods industry, headquartered in Richmond, Virginia. Best known for owning Philip Morris USA, the maker of Marlboro cigarettes, Altria has built a dominant position in the market. But this company isn't just about cigarettes. It has diversified into cannabis, alcohol through Anheuser-Busch, and vaping products, positioning itself for the future. Why is Altria a top dividend stock? Well, let's dive into it. First, its Dividend King status, a legacy of payouts. Altria has been increasing its dividend for over 55 years, securing its place among elite dividend kings. With a robust 7 to 8% yield, it's a consistent cash generator for income investors. The company targets an 80% payout ratio, ensuring steady returns in 2025. Pricing power, profit machine. Despite a decline in cigarette sales, Altria continues to raise prices on its iconic brands like Marlboro, keeping profits steady. Analysts project 3.5% annual earnings growth through 2025, ensuring those dividend checks keep flowing. And finally, Altria isn't clinging to the past. Its investments in smoke-free products like vapes and nicotine pouches are gaining traction. With strong demand in 2024, these alternatives could fuel new revenue growth in 2025 and beyond. So, is there any red flag to look out for? Yes, and it's the biggest risk: declining cigarette sales. Cigarette consumption is plummeting, down 10% in 2024. If Altria's shift to alternative products doesn't scale fast enough, the dividend could face pressure. Investors should closely monitor its diversification strategy heading into 2025. Next stock is Regency Centers Corporation, and the ticker is REG. Regency Centers is a real estate investment trust, or REIT, that specializes in open-air shopping centers, making it a strong contender for dividend investors in 2025. What makes it stand out? Dividend growth that keeps on giving. Regency just boosted its quarterly dividend by 5.2%, marking 11 consecutive years of increases. This consistency reflects strong cash flow and management confidence, making it a solid choice for income-focused investors. Grocery-anchored stability. Unlike other retail-focused REITs, Regency centers its portfolio around grocery-anchored shopping centers with reliable tenants like Kroger and Publix. Even in economic downturns, people still need groceries, ensuring steady rental income. Record-breaking leasing power. In 2024, Regency saw record-high leasing activity and occupancy rates, setting the stage for even stronger revenue growth in 2025. More leases at higher rents mean more cash to fuel dividends. So, is there any red flag to look out for? Yes, and it's a big one. High price and high risk. Regency trades at a premium compared to other retail REITs. If interest rates rise or valuations stretch too far, upside potential may be limited. Investors should watch for market shifts that could impact future returns. Next stock is Getty Realty, and the ticker is GTY. Getty Realty is a real estate investment trust specializing in freestanding gas stations, convenience stores, and automotive service centers across the United States. Here's why it's a standout dividend stock for 2025. Reliable dividend growth. Getty has raised its dividend for 11 straight years, with a 4.4% increase to 47 cents per share quarterly. With a yield around 6%, it's a dependable income generator for investors. Recession-proof properties. With over 1,100 properties, Getty's portfolio includes essential businesses like gas stations and convenience stores, places people visit regardless of economic conditions. This stability ensures steady rental income and secure dividends. smart expansion strategy. Sitting on $240 million in committed capital, Getty is actively expanding. It plans to acquire more high-yield properties with an 8% plus initial cash yield, setting the stage for strong revenue growth and bigger future dividends. Whenever you are considering the stocks, don't forget to consider the red flag, which in the case of Getty is overvaluation risk. Getty is trading near its 52-week high of $33.84, and some analysts believe it may be overpriced. If interest rates spike or the market cools, its premium valuation could shrink, potentially limiting upside. Investors should monitor the stock's entry point to maximize returns. Top on our list of stocks is Energy Transfer, and the ticker is ET. Energy Transfer LP is a midstream energy company that owns and operates oil and natural gas pipelines, storage facilities, and processing plants across the U.S. Here's why it's a high-yield dividend stock worth considering. Massive yield. With a 6.5% dividend yield, Energy Transfer is a cash flow powerhouse, offering significantly more income than the S&P 500's average 1.4% yield. Steady growth engine. The company saw a 13% increase in EBITDA last year with a 5% projected bump in 2025. Acquisitions like WTG Midstream and organic projects continue to fuel expansion, ensuring long-term cash flow. Cash flow. Fortress. With long-term fee-based contracts, Energy Transfer's 125,000-mile pipeline network generates stable revenue. Over 50% of its distributed cash flow is retained for future growth, keeping dividends secure. But what's the red flag? It's MLP tax complexities. As a master limited partnership, MLP, Energy Transfer's distributions offer tax advantages, but come with complicated K-1 forms that could create headaches, especially for those holding shares in retirement accounts. It's something to consider before investing. With these top dividend stocks for 2025, you now have a strong lineup of companies offering reliable passive income and long-term growth potential. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.